Hello, good. Well, we're still in the morning, I believe. I've lost a little notion of time. So we have an interesting panel on insight investing in the hospitality. And for that, I will call my different member of the panel, Mr. Russell Kate, who is the chairman of HVS London. I think Russell is one of the veterans in hotel valuation. I know his name since so many years. Here, Russell. It's okay? We have, let me find my paper, because I read all those names so often that somehow I don't know them anymore. Vlad Dragoescu, who is the director of, for CE for the Group Revetas Management Portfolio. Mr. Ravan Testa from Lawyers Office. As we know, when we speak investments, it's important to know what are the contract and the legal elements. If you want to invest, we need the banks. So I would like to invite Mr. Dan Daskal from the Banca Transilvania. And finally, as we have to have two evaluators, Mr. Heinz Verle from Ovart and Ovart, Switzerland. So here we are. I need the mic and everything is to you, because I don't want to stand for it. Hello, gentlemen. A lot of gentlemen. Already there is a lady. We are speaking investment of hospitality. And I think if I look at the panel here, we have almost all the elements that are important into a decision for investing in hospitality. So my first question is very easy, and we can start with evaluation. Why to invest in hospitality? Okay. Go ahead.
Maybe I can start. Hi, everybody, again. Look, first of all, let me do a short summary after everything we saw. So there is discrepancy in terms of yields. We saw Romania versus Germany over West. So we're talking about 200, 300 bips. Huge, correct? We see discrepancy in post-COVID recovery. We see markets, I can name Czech Republic, Croatia, that are doubling their ADRs, markets like Romania, Bulgaria, that are 40% up. We see everybody getting affected by, obviously, the inflationary impact. So why do we invest in hospitality? It's very simple, because it's the only asset class in commercial real estate that can push inflation and can push any type of market disruption directly to the end consumer. This is unique. You cannot do it in office, you cannot do it in retail as of day one. But, and there is an important material but here, if a market allows it. So in a market where you can increase ADR, where you have a lot of leisure, where you have a lot of domestic demand, you can do that. And it's the best asset to invest. In other markets, not so much. So some previous panelists were explaining that we should put 4 seasons in Romania. We have a Radisson Blu that it's really a market leader, the largest in the country, and it's not really working where it should be. Why? Because of a type of segmentation, type of demand. So yes, hospitality is the best asset class, but we need to be very careful. And we as investors, we are IRR focused, not yield, not revenue. So if an operator is looking at the top line revenue, because this is where the fees are, and the GOP, you know, there are a little bit two small lines called holding cost and debt service that can put you from a very nice revenue story to a very nice bankruptcy story on our end.
At the end is the EBITDA that counts.
Exactly. Everything gets paid with EBITDA, not with revenues and not with fees. So having said that, we need to focus you need to focus, or everybody, when you're buying a hotel, not only what's the cap rate, what's the current segmentation, is it core because it's just in a good market that is benefiting from the revenge traveling, or fundamentals are really there. What's the capex, what's the FF&E, where the market will move, how much you need to invest, and when you're going to exit, how you're going to exit, what type of product. If you look at all those, it can be one of the best type of investments you can make. Sorry for the long introduction, but...
Thank you. I don't know if one of the... Russell?
Sorry, was there a question there? I think he's answered it on... It's very hard for me to add anything because I think he's done a terrific job. Well, we can all go.
No, we still have some questions.
The key to me, on top of everything else, because we can all be in violent agreement with each other if we so choose. But I would say two things to add. One is I cannot say any reasons why we shouldn't invest in the hospitality industry, because as you can see, I'm more than 25 years old now, and I've earned a living from this business for a long time, and it's my passion, and I couldn't do anything else. But being very serious for one moment, it has to have a valuation impact that makes a return on investment absolutely paramount. And at the moment, the hotel sector in many parts of the world is so much better than other asset classes. No longer are we just a little bit of an also-ran sector somewhere in property. We're an asset class in our own right, and that's taken a long time. And now, having got here, it's very important that we prove ourselves worthy of being considered in that asset as a real property, as a real investment asset. So yeah, valuation is key. And secondly, it takes people. I'm sorry to reiterate what Ray has been going on about all morning, but it takes good people to be able to do that. And unless you have good people to achieve it, you might as well go home. And that's where the hospitality sector, the hotel sector, differs from many. It doesn't take good people, realistically, to produce a good office development or a good residential development. It does take good people to produce a good hotel investment.
And to add the commercial value at the end of the assets, because otherwise it's a nice building, but no commercial value. Dan, as a banker, how do you look at it? Because hotels are capital hungry.
I'm an investment banker. I run an asset management company. Basically, we have under management classical investment funds like equity funds or fixed income funds. But also we do have under management real estate funds called BT Property. Among our investments, we have investments in retail parks, in offices, in clinics, medical clinics. We do not have an investment in hospitality yet, but we won't rule out in the future. Maybe we'll find some good opportunities in the future to invest in such properties.
There are plenty here today. Who's needing investment? Anybody?
Basically, an investment can be attractive by several factors, such as cash flow that the property generates, and also the appreciation of the value. As long as the property is located in a good position and generates enough steady cash flow during the years, the value of the property will increase over the years, and of course, because I'm an investment banker, we'll have the opportunity to sell it at a profit, right?
Definitely, not to keep it on the long term.
Another reason why to invest in hospitality is that diversification. You have the opportunity to diversify your investments, not only in equity or bonds or other type of real estate assets, but sometimes an investment in hospitality could be profitable.
Not sometimes, hopefully often.
Yeah. I'm an investment banker. I always look for most profitable investments.
Definitely. You know, there was this approach, and I think maybe that has changed over the years, but when I started, like Russell, I'm just above 25. A lot of companies were investing into building to have assets as capital, and then giving them to hotels, to brands, to manage, knowing that usually hoteliers will keep good maintenance of their assets, so keeping the value of the assets. Is it something, I don't know, maybe the evaluator that you still see going on, or that has changed and we see more individual owners having hotels and who want to have the evaluation? I don't know what our legal department will say.
Well, hello everyone. My name is Răzvan Test. I'm a partner with Tukas Bârcea and Associates, and well, I have the privilege to work closely with the hospitality industry. Actually, just came from Vienna last night from a real estate conference, CEE Property Forum, and I was in a hotel panel, and the mood was not necessarily optimistic. I mean, I've seen a lot more optimism this morning with Frank and people talking in the panel moderated by Tinu about huge investment appetite for this kind of assets, hospitality assets in Romania, which can make us only happy because if there are investment, there is also legal work. So this is where we kick in. So I'll bring in the legal perspective. We've seen quite a lot of deals, but not necessarily transactions. I mean, not like Revetas has been doing to buy a trophy asset a few years ago. Mostly operational agreements, either management, mostly franchises, and more recently lease agreements, which is a model pretty new for the Romanian market, not widely spread. I mean, as far as I know, there are only a couple of leases that have been signed. We have done one, and we're in process of signing the second one for one of our clients. Things are a bit complicated. I mean, there are many elephants in the room when you negotiate this kind of agreements, leases or investments. It's always depends on the asset. If it's a greenfield, or if it's a brownfield, or if it's a reconversion, it all ends up with the permitting process, which depending on where you are located, if you are unlucky and you're in Bucharest and you have to face all the hurdles and the administrative challenges, it's quite painful. If you are in a secondary cities, things are probably going all a little bit more lenient because the authorities are more favorable to this kind of investments. So you have the building permit. In case of hotels located in the city center, for sure you end up either with a building which itself it's classified as a historical monument, or it's in the protection area of a historical monument, which makes things a little even more complicated. Then is the fire permit, and they go, of course, hand in hand, and ultimately all the functioning authorization and operational permits. If you don't have the fire permit, you cannot get the functioning authorization. If you're on the lease model, then the opening date would knock on your door and you have to open, but you cannot because you cannot get the functioning authorization, although the rent kicks in. So it is a bit complicated. And the beast of the mall, I mean, the elephant in the room, but there is also an even bigger elephant, is the ESG, which a lot of people, well, we keep talking about ESG for years now, but now it's here. I mean, starting next year, people will have to start to do the reporting, and because it's said that lawyers sometimes are boring, I just want to give you a quote that I found on ESG. It was not on ESG, it was actually on big data, but if you replace big data with ESG, we are there. So it's a chap named Dan Ariely. I'm quoting it because I don't want to infringe any copyright. And he said, big data / ESG is like teenage sex. Everyone talks about it. Nobody really knows how to do it. Everyone thinks everyone else is doing it, so everyone claims they are doing it. The issue is that from 1st of January 2005, it will no longer be the case, or yes. 2026, and it will be difficult. And on the market, there will be a lot of opportunities. I mean, challenges comes with opportunity because there will be owners who will not be willing to allocate the required capex to do all the retrofitting and so on. So they will have to deploy eventually the asset, and of course for a discount. And then guys like, no. Okay, no, you are core. But a net value investor would definitely
I'm kidding, but maybe you should mention what the operator can do also. So I think that's the elephant in the room. And coming back to your question, you were saying a hotelier and operator is bringing value, used to. from my point of view, and half of the room will hate me, but they're hating me anyhow. So,
It depends of the operator.
Why? Why? Because in the end, everybody's after GOP. They're after two things as an operator. I mean, all the bonus schemes, all the KPIs are about revenue, whatever ADR, FPAR, and then about the GOP margin and profitability per each department. And if you only target that, then you're not going to be left with any money for training people, for example. And let's face it, most operator wants a payroll that is very flexible. So they want to switch FTEs from in-house to outsourced. You cannot train outsourced. So we're seeing all these trends. We're looking actively in buying new hotels throughout CE. Everywhere, every single GM is very proud, shiny in his new suite, telling me that, yes, 40% of our payroll is outsourced. Yes, our GOP margin for next year is 2% more. This is not sustainable. And how they are achieving it? By cutting cost. If you cut cost this is not efficiency. This is about cutting cost. When you cut cost, you dilute the value of a building, because on an exit, you're going to have a TDD. Not only TDD, you will have a full due diligence, but only think about TDD. So HVAC, equipment, whatever procedures weren't respected, they're going to come with a price deduction ticket for you as an investor. ESG will come for you. Banks will also, Euribor increase, even if you have a good hedging in place, still impacted us. So all these things are going to the owner and not to the operator. And when the operator is telling you, our latest FF&E package after 10 years, it's 50K per room, take it. No, it needs to be adjusted to the market. So I think it's with all the respect, it's a huge disrupt at this point in time between ownership and management companies. And this is why we see a lot of switches to franchise and to white labeling, because owners end up doubling their management structures. So.
Yeah,
Go ahead,
I agree. Great to be here. I'm from Switzerland, and I just can talk out of our perspective. We are negotiating a lot of operating contracts. And there you see the big elephant in the room. A lot of investors don't understand these kind of contracts. White label, franchise, management. It doesn't exist. If I have a shopping center or an office building or retail, it's crystal clear. And it's up to us, to the professionals, to explain what the contract means. And we have to give the investors also flesh on the bone. Looking at contracts which existed, the standard management contracts, terrible. If somebody signs this kind of contracts, he can shoot himself in the knees. So never sign a management contract as proposed. It's what you said from the lawyer side, negotiate performance guarantees, GOP guarantees, whatsoever, to make sure that our investors get something back for their money. And that's up to us, to negotiate these kind of contracts. And that has changed in the last 2 years. The last contract I negotiated was with Mandarin Oriental with a substantial GOP guarantee in the operation.
As a value or as a percentage?
As a value.
As a value, because it can be, it makes
as
quite a lot of difference. No, I agree, it's important that any owners, directly manager or in the name of the owner, has to maintain the assets. Otherwise, I was always saying, yes, you can cut cost, but cut cost has an impact on the short, long term. There are crises where you have to adjust your structure to be able to survive. But at the end, we are a service industry, and the service has to be maintained. So that's the whole. So, do you invest in hospitality? Yes. The building are element. Now, the question, and maybe we start with the valuation. If you have several options, how do you select what property to take? What would you recommend to look at for somebody here if you want to build a hotel, open an hotel? And I've seen along my life a lot of owners who want to have their hotels. And they want to have everything, and then after 1 year they say, where's my money?
I've been to many conferences, Christine, but this is the first time I've seen so many elephants in the room. You've just asked the 64,000 euro question.
Yep. Only 64?
if I'm looking at a hotel opportunity, I put myself in the shoes of the owner or the operator or whichever, but everything comes down to money at the end. And one thing which I've learned very quickly is you can't take a percentage to the bank. It's money that counts. It's cash. Someone was saying earlier, cash flow. Hoteliers traditionally have been obsessed with percentages. And if there's one thing that I've tried to do in the last nearly 50 years is to say, it's all very well having a high percentage of occupancy or a high percentage of profitability, but if it doesn't translate into cash that you can then take to the bank and put it in the bank, percentages are out. Somebody mentioned earlier RevPAR. Somebody mentioned earlier GOPAR, GOP per available room. And at the end of the day, I'm trying to encourage people to think about profit or revenue per square meter, because that's the other way that we present the hotel sector as a valid asset class compared with shopping centers, retails, offices, residential, and so forth. So you have to speak the same language as the investment community, and it all boils down to how much money can you make out of this piece of property. And then it doesn't matter. It doesn't matter to me whether it's a luxury hotel or an economy hotel. It probably matters if I'm an Arab sheikh who wants to show off and doesn't necessarily want to show off an economy hotel to his friends. But at the end of the day, if we're talking about reasonable investment people who understand what property investment is all about, it has to be right for the individual building, but it doesn't matter whether it's 5-star or no star, as long as it's making the most money it can.
And if you look at long-term or short-term, but we'll come.
Oh.
So, Vilma is lacking the element. Let's say I have some money, I want to invest in an hotel. I have no clue about hospitality. It's not true, but I have no clue about hospitality. How will you direct me? I have an example here of a person who got convinced to go on hotel, not by us, and I only came later. And she's bleeding, to be honest. The company is bleeding because the hotel does not come. So I always say, if you want to invest into an hotel or consult before. Hospitality is quite a volatile market. It's not because you have a nice hotel somewhere that everyone will come to you. There is a lot of support. So I don't know, you will have your experience, but from Ovart and Russell, Heinz, if someone comes to you and say, I have money, I want to invest in a hotel, what will be the recommendation that you say, what you have to look at?
Christine, very nice question, and I agree with Russell. Our clients come to us and say, Heinz, we intend to invest $50 million. We want to have a minimal return of 5%, decent risk. Would you have a hotel to offer? So they compare with the shopping, with an office. They don't have to purchase hotels. If the opportunity is there, well managed, risk, handleable, FF&A, CapEx in place, then we can recommend it. But hotel is nothing else than a commercial property at the end of the day, and it has to make money. That we have to see, and I agree, it doesn't matter 5-star, 1-star, service departments. No headache for the investors. They want profit, no headache.
Yeah,
I feel very sorry for your friend who's got a hotel that's hemorrhaging and she's left with little opportunity to get her money back, because I suspect at the end of the day her best option is going to be to sell and to remove the headache.
But there you go onto the funds, and selling is not always possible.
Well, a fund may not be the best way of exiting, but finding the right exit and helping her get that exit is probably the most humane thing you can probably do. Many institutions now won't look at hotel investments unless they are already compliant with ESG. So, if you know that there's investment going to be required, I think you just have to bite the bullet and say, well, what's the worst position that you can be in, and hope to improve on that financial position.
Definitely.
And sorry, if I may just
Yeah,
quickly.
I see the two of you.
We are fighting for the mic. So if I may quickly add, I mean, in terms of equity sourcing, so capital is coming with a cost. It doesn't matter if it's debt, if it's equity, you have a cost, which means that you need to produce a similar IRR as a minimum threshold. In order to produce that, especially now when the capital cost went up, obviously each and every investment, so from your initial underwriting, you need to be sure that it's working, and then everything you put in that property needs to increase, to be incremental to that IRR. And I think that's the key. Many people are doing their underwriting in a very high level, very diluted way. You know, what's the ADR in the market? Let's take it's a 5-star, exactly like you rightfully said. If it's 3-star, it's going to be like this. They're not looking into segmentation. They're not looking into the fundamentals of a market. They're not looking into future capex, into future compliance. We haven't even discussed about compliance with Răzvan. Compliance can hit you, especially in countries like Romania, for example, or Poland, can really hit you a lot. So if you don't understand all this, indeed, you will overpay, and then you will start bleeding eventually, and you will need to take a loss, and this is where the distressed property are coming.
Yeah, and as I mentioned before, hospitality is capital hungry.
Before I pass the mic to Dan, there's a tax. I need to say something as well. So we've done a lot of property deals, and I mean, fundamentally, you are right. For investor, it's an asset, but when it comes to, from a legal due diligence perspective, if the investor is buying an office building or a shopping center or a logistic park, they are looking at the NOI, capitalized with the yield, that's it. We look into a number of lease agreements. It depends if it's a large office building, I know, 30,000 square meters, and there are 100 of leases. We probably won't look in each and every lease, but we want to be sure that there are no break options, that there is no leakages in service charges and things like that. There are no cap, there are no step rents. It's a little bit easier. When it comes to a hospitality asset as a hotel, and if it's a hotel in Bucharest, which is mostly business destination, I think it's a little bit not simpler, but well, I don't want to walk on the rest. Yeah. But when you talk about a hotel, a resort by the Black Sea, which well, it operates for 2 or 3 months, then it becomes a little bit more complicated to make this
to make a
to put the
correct
figures
return,
up.
because you have only the operation. You have cost of operation even reduced the entire year, but revenue only for a few months. I know that we have some people here from the Black Sea who will comment. Yeah, so as we say.
But seasonal hotels can make money, and they should make money, and they make money in a very short amount of time, but they then have the disadvantages of not being able to have the staff with them every year, and they have to re-employ people and so forth. But it makes a good living if you get it right. And it does it all around the world. The Black Sea is just an example. But just because you've got a seasonal hotel in the Black Sea doesn't mean you can't make decent money.
We do have clients who invest, not Romanian, they're funds. They are investing in hotels. They would love to buy, are looking also in portfolio deals, but they do deals in Italy, Spain, the Adriatic coast, because they're not, these kind of assets, for the time being at least, are not available in Romania. And we also see a little bit of shift in the paradigm, which would have been counterintuitive a few years ago. Romanian investors, high net worth individuals, buying hotels like a landmark hotel in Switzerland or on Lago di Garda in Italy. So
Maldives and things like that, as we have seen. No, there is yes, Dan.
I don't know what I have to add. I do agree with my colleagues that the cash flow that property generates is very important aspects of an investment. But also it's very important that prior an investment in hospitality, the investor should define his goals and to be aware of the risk that this investment involves. Because we experienced in the last years some terrible events. We had COVID, we had, who knows, maybe a war. And there are a few risks involved by investments in a property. And I think that the location of the property is very important, related to tourist attraction, related to transportation, related to demand. I don't have much expertise in investment in hotels, but I will take into consideration these aspects prior to investment.
Yeah, definitely location, target clientele, what kind of service you can offer. Do
And
you have
also the management
alternative
of the
as well,
property.
and the management is important. I think
Management, facilities, staff.
what can offer and what are the alternatives? As you correctly say, I think the COVID crisis was unique in the world of hospitality. I always said this is the only time in the history that hospitality shut down on its own. Because even during war, during crisis, hospitality continued. Yes, some hotels are shutting down on everything, but it was really the first time that everything stopped, or almost stopped at 99.9%. So yes, there is this volatility into hospitality that we have to consider. But as well, we see quite often that and I will ask my evaluator to confirm or not, we see we'll speak about revenue or RevPAR for that, are in fact following the economy of the country. We see quite often, if something happens, if you enter into a crisis, and I've been to the different crises, one of the first expenses that companies will cut is meetings, incentive, everything, training session, corporate travel. So we have the element. I always say, I could see when the economy was starting again into, speaking 13, 14, because you see those companies starting to expand. And then when you see the hotel bringing. So yes, we are subject as hospitality to the cycle of economy. Do you agree, Russell or Heinz?
Yes, but.
Thank you for that.
There's always a but. I think you touch on COVID as being a good example of something which took everybody by surprise. It was unique.
And hopefully it will stay unique.
And hopefully it will stay unique. But what did the hotel business do? And it's very interesting to see how some hoteliers were able to make a lot more of the rebound once we were able to trade again and so forth. And which is why I always say, and forgive me, we always see statistics as averages, right? Everybody's an average of something. And I always say, just because it's an average doesn't mean that that's the level you should be happy with. To make an average, somebody has to be doing better, somebody's doing worse. So if you can be above the average, that's always where I would encourage you to. But what happened during COVID was that we had a rebound of something called revenge tourism. And that's still going on in some cases. It's largely dried out because we've moved past it. But it was a way that hoteliers were able to benefit from people who were just itching to get away. And it's wonderful to see how domestic tourism was the first bit of the stack to come back. And gradually we've built back, and we've got the corporate business back, and we've got the conference and meetings back, and internationally, and this, that, and the other. But the hotelier who is imaginative and can think on their feet really didn't do as badly as everybody else. So they were the ones above the average. Just think of the poor people who are below the average, because that's what makes up the average. But I'm always encouraging people to think better than just being happy with being on average.
No, as you always say, if you have 1 feet in cold and 1 feet in warmth, on the average, you are very comfortable.
Yeah, no, I agree absolutely. The but is, and that's interesting in our industry, in the hotel industry. the operator or the management is so important. It makes the difference. It makes the difference being way above or being below. And that's why we have to choose the right operator or company or person to manage that hotel. In our asset management, we have cases, they are doing fantastically in Austria, and the difference is 30%, or in terms, 500,000, and the other one does 4 million. Same location, same hotel, but the management is the difference. The attitude, how you treat people, what you provide. Our job is, as a hotelier, we are people working for people. And it's a human business, and it remains a human business. And that's why it's so important to have the right partners.
Good. Any question on that subject from the assembly before we move to the next one? Okay, so we spoke about IRR, return on investment. Now, one of the elements that I've seen and that we see developing with the different level of hospitality coming, from the emergence of the focus service hotel or light service hotel, the budget economy hotel versus the top 5-star luxury hotel. Traditionally, the hospitality was seen as a long-term investment. You are building an hotel, takes time to get the return on investment or the payback. And people were ready to say, okay, invest for 10, 15 years, 20 years before really get the money back. But I have the building, I have the valuation. Now, with the emergence of the economy budget hotel, I see more and more demands to have a return on 7, 8 years. What is your opinion on that? Knowing that, I would say, I just put the idea, it doesn't mean you have a 5-star or luxury property, you know that the asset, the building, the commercial building will increase over the years. You have a good close-hill asset. When you go on more simple hotel as economy budget, the base investment is a lot less. So probably the length of life of the asset will be shorter. And I don't know, I just put the idea on the table. I see Russell. So Russell, go ahead.
Okay. I never like disagreeing with my moderator, but I don't think it makes
That's
any
what
difference.
I want. I want you to disagree with me.
In the old days, and I go back, as you know, to the old days, it always was said that it was only until the third owner that any money was made. I don't want to be a cynic, but in essence, whether you're building a luxury hotel, whether you're building an economy hotel or something in between, you have to expect the requirement to make money in a period that meets your investment cycle. So if your investment cycle is 5 years, you have to be able to make money in 5 years. If you have a longer investment cycle, that's fine, but you need to be able to show a return on your investment within your investment cycle. Now, budget hotels cost less to buy or cost less to build, and they require less intensive efforts to make money because you're talking about fewer people. You're maybe just a bed factory or whatever. But I don't think timing is an issue. You have to be able to make money and show a return on your investment within whatever the reasonable time expectation is for that investor. I was around, I came out of operating hotels in 1977. Now, I know that's before most of you were born, but there was one deal that happened and closed on the last Friday of January 1977. And that was a takeover of a company called Strand Hotels by Trusthouse Forte, names that you may have read in history books. It was a wonderful deal. It was about 27 point something million pounds, and they got thousands of rooms for that. And why did they have to sell? Because they borrowed in dollars, and the exchange rate went haywire, and all of a sudden what looked like a good, solid, hold investment went out of the window. Trusthouse Forte bought that group and did very well out of it. 20 years later, Trusthouse Forte didn't understand the meaning of the word gardening. And what the word gardening means in this context is that if something doesn't fit, you do have to get rid of them. And you have to weed out the hotels in your portfolio that don't quite fit, or you could make money better doing other things with it and stuff like that. So they got bought out by a company called Granada. And I was around in both of those transactions and quite heavily involved in them at the time. But it just shows you that the old lessons are still relevant as today as they were 20 or even 40 years ago. So I'm sorry to take a long time with the answer, but I hope it does get you somewhere towards getting where you want to go.
No problem. Heinz, you wanted to say something?
Actually not, but looking at our clients, I have to say their investment horizon is somewhere 5 to 10 years. And they need to make money in these 5 to 10 years as a pension fund. So one source is the income out of the operation. And the other important factor is the win during the transaction. So it doesn't matter if I have a 1, 2-star hotel, economy hotel, it has to be kept in good shape so that I'm able to sell it after 5, 6, 7 years and make a decent profit. And the same appears to the 5-star hotel. It's my
Okay, I
opinion.
just wanted to,
Yeah.
I see that you were, and I know you had a very big transaction here.
I wanted to add that basically we generally have 3 cycles that you need to align in order to understand your exact investment. So you have an equity cycle, depending who's funding you and what mandate and for what return amount. Then you have a project cycle, maybe it was built 10 years ago, maybe 20, maybe it just got refurbished, maybe it's a greenfield investment. And then you have a market cycle, which is really important. So when am I getting in, when am I getting out? Is it super priced, is it inflated? Do we see new trends, new segments coming to the market and so on? And once you align this, yes, indeed, investment-wise, ideally you need to make, it's a simple KPI. You need to make a multiplier of 2x in 5 years. This is your typical investment profile for commercial real estate, which in an office building, as Razvan was saying, it's very straightforward. It's fully leased. You have a WALT of 3.5 years ready to go. It's 80% leased, 70%. You get a good price. You get a good entry yield. Okay, you invest, you know where you're going to be, and you sell it in 2 years after it's fully leased. In hotels, it is much more difficult because you need to understand the market and where the market is heading. And yeah, I think you need to align these 3 cycles in order to be profitable.
I will bounce back on your knowing the market. So investing in Bucharest, capital city, being in Romania or whatever, it's almost a secure place. You're probably the first, you're the first entry point for a lot of business people and everything. Now the question is what happened in we have the so-called emerging market, new countries, but you have as well the secondary location, or I call them undiscovered location, not really for business hotel, but you are speaking more their leisure destination, where we see as well from a lot of customer and appetite for unique location. Now, when you go and decide to build an hotel in the top of a mountain somewhere, it's a risk. How will you, as an investment bank, how will you assess a risk? I say, I have a wonderful location on the top of, someone is telling me, oh, time is flying. So then you have the last.
Well, it's a difficult question. Of course, everybody wants to invest in a capital city or in the other important cities in the country. And when it comes to make an investment somewhere remote, it's a very difficult task to to add value to that investment, it has to, of course, the return of investment must be much higher than an investment in a safe location like a Bucharest city center, and this property has to have something to catch me as an investor.
Good. I think I've received a signal that we spend our time. So sorry, we have no time for the question. I think the timing was a little delay, one moment. So, gentlemen, thank you very much.
Thank you.
Thank you very much to all of you, and we see each other later. Thank you.